Hi. Today, I'll be taking you on a quick tour of Dmroo. Dmroo is an event-driven, automated accounting and settlement platform for new age business models. What do we mean by new age business models? The internet has enabled multiple players to come together and deliver a product or service to the end customer. A single transaction translates into revenues for multiple participants in the transaction. The sheer complexity and volumes of these transactions bring unique challenges on the accounting and settlement front. Let's look at some of them. Multiple varying relationships. Each distribution channel, like selling on marketplaces, via app integrations, through affiliates or influencers, requires a different commission or revenue sharing structure. High transaction volumes. Since you are selling directly to the end customer, transaction volumes go through the roof. Differing settlement timelines. You may settle funds at different frequencies with affiliates, agents, vendors, and digital channels. You may also have a cooling period before revenue shares are settled to allow for rejections. Stricter compliance standards. Financial compliance has evolved alongside the fintech industry and is now tighter than ever. There are a lot of new regulations that fintechs, NBFCs, and banks must comply with. These challenges can only be truly addressed by a new age accounting system, one that does automated accounting and settlement in real time and at scale. Dmroo goes one step further and does all of that in no code. As a result, we can set up a new business model in a matter of hours. So how does Dmroo do this? Dmroo borrows from the blockchain concept of DAO. DAO stands for Decentralized Autonomous Organization. A DAO is essentially the representation of your business model in accounting terms. It encompasses all the stakeholders that participate in your business model, like your customers, vendors, and partners, and your financial relationships with all of them. Accounting in Dmroo is event-driven. Dmroo provides a single API for your business applications to call every time there is a business event. For example, in the case of lending, you may have a loan origination event or an EMI event. Dmroo automatically fires accounting entries needed to account for that event. It can also then push consolidated vouchers to your ERP. Finally, Dmroo settles to all your vendors and partners based on a predefined schedule. Payouts can be done using the UPI or NEFT mode. It's now time for a quick demo of the platform. Hi. For our Dmroo demo, I've chosen co-lending as our business model. We have a fintech who is involved in co-lending with a lending partner. They give microloans to the tune of rupees 30,000 to small merchants, mostly women. For our Dmroo demo, we need to choose a business model where we need to automate the accounting. I've chosen the co-lending model because it has some particularly complex accounting requirements. This is how their accounts team was managing the co-lending relationship. There is the loan amount of 30,000, the partner's share, which is 99% in this instance, the processing fee charged by the partner, and the net amount transferred to the fintech. Finally, then their own processing fee plus GST and the insurance. They sell insurance worth 300 to the customer, plus GST, then the e-natch fee 7.5 for setup, and 2 rupees for each EMI auto debit, and the final amount dispersed to the customer. If this were being done using double entry accounting, what would it look like? I have some T accounts here with me, and have represented the previous spreadsheet in terms of double entry accounting. You see the colors on each T account. They represent the roles or parties. The green ones are the fintech's accounts, the peach ones are needed for each lending partner, and the blue ones are for the customer. So if a new customer comes in, we need all the blue accounts to be created for them. This, of course, Dmroo does automatically. The lending partner and the fintech both pool in their share of the loan amount. Often the fintech's share in the loan is as low as 1%. The partner charges a processing fee, and transfers the net amount to the fintech's account. The fintech then adds their processing fee, sells insurance, and charges an eNACH fee, 7.5 for setup and 2 per EMI for 12 EMI. A B2C GST account is required for the 3 service fees charged to the customer. The lending partner also charges a processing fee plus GST on the loan, which is passed on to the customer, and the difference is the expected disbursement from the lending partner. The fintech was already paid their share of the processing fee on the lending partner's amount, for which they need to provide credit to the lending partner and a B2B GST account. They will need to raise an invoice for the same. Finally, all the services applied to the customer, worth $1276.17, and the final disbursement amount is determined. The balance that remains is transferred to the corporate account. There are 20 accounting entries, all on a single business event, loan origination. Now, let's log into Dmroo and see what this looks like in Dmroo. We see 3 DAOs here: co-lending, agents, and digital channels. So the fintech also has agents who sell their loans and some apps like GPay and Paytm, which they have integrated into to sell loans. But we will focus on the co-lending aspect for this demo. In the co-lending DAO, you see the 3 types of accounts we saw in the Excel. All the accounts are represented exactly like you saw there. We have the fintech's accounts, the lending partner's accounts, and finally the customer's accounts. What we need now is to see what happens if we send an origination event to Dmroo and see if Dmroo does the accounting as promised. I'm going to use a Postman client to fire a process event API call to Dmroo. I have the event name, origination, and the payload identifies the 3 parties and some parameters like the loan amount and number of installments. Remember, we need the number of installments to calculate the eNACH fee. As I trigger the event, Dmroo completes the event process and returns back the entire context used to compute the accounting entries and the 20 debit and credit entries that Dmroo has fired on this event. Coming back to the Dmroo dashboard, we see the actual entries that have been made. We can go into each account type and see the ledgers. Dmroo has automatically generated the correct accounting entry computed entirely from the loan amount and number of EMI. Dmroo also has the ability to make scheduled or real-time payouts over UPI or NEF. So let's take a look at the disbursement account, which has been flagged for payouts. Here we can set up daily, weekly, or a monthly schedule for payouts from this account. There is also a cooling period in days that you may wish to maintain to ensure that you have room for any exceptions or cancellations. So the closing balance in each account on the day that is cooling days prior to the settlement date will be automatically paid out to the beneficiary of that account. This is the power of Dmroo. And from the moment your accounts team approves the accounting entries, it takes about half a day to set up and test your business model. So get in touch if you have any questions or need to see Dmroo in action for your use case. I have added related links in the description so you can reach out to us. We'd love to hear your feedback on Dmroo, so please do leave a comment. Thank you.